All right, good afternoon, everybody, and welcome to another masterclass session. My name is Michael Tibbetts. I'm a content specialist here with TradeStation Securities, and I'm filling in for Jesus Nava today while he is out for today's masterclass. Now, today's session is all about support and resistance, so nothing too crazy, but we're just going to talk a little about support and resistance. If it's a new concept for some of you, you'll surely get the hang of it probably by the end of this session. For those of you that are a little more experienced, good refresher about support and resistance nonetheless. We're going to go ahead and open up with our disclosures. We're going to wait for some people to come into the class. So while everybody's getting in, let's go ahead and go through these disclosures real quick. I'm going to stop my video, just pull this up. So this content is for educational and informational purposes only. Any symbols, financial instruments, or trading strategies discussed are for demonstrational purposes only, and they're not research or recommendations. Past performance, whether actual or indicated by historical tests of strategies, is no guarantee of future performance or success. For more information on these risk disclosures, you can go to this website right here, this www.tradestation.com/important-information to get a little more information about some important information and disclosures. Also keep in mind that TradeStation Securities, TradeStation Crypto, and TradeStation Technologies are wholly owned subsidiaries of TradeStation Group, as well as You Can Trade. And if you're trying to learn the differences between each one of these subsidiaries, you can use this link right here to go over it. And I skipped over this part right here. So securities and futures trading is offered to self-directed customers by TradeStation Securities, Inc., which is a broker-dealer registered with the Securities and Exchange Commission and Futures Commission merchant license with the Commodity Futures Trading Commission. All right, you can read the rest of this on your own. And we'll leave this up just for a few minutes while we're getting everybody in. And that's pretty much the disclosure portion of the class. Let me go ahead and turn my video back on. Welcome you all into the class. So James, Matthew, Peter, Rich, good to see you all. For some of you, it might have been a while since you've seen me. I'm just kind of filling in for Jesus right now. Hopefully you're all doing wonderful. What's going on, Matt? How you doing? Good to see you. All right, so today's course is all about what is support and resistance. So price levels where price trends can be expected to pause due to a concentration of buyers and sellers. So pretty much when we're looking at charts, these are kind of like the ebbs and the flows, right? Or if you're looking at it almost like a wave, this is like the bottom and the top of the wave, right? And this is areas where, you know, people tend to buy at and people tend to sell at. And so that's really where all that pressure comes in from. And so a lot of these price levels can serve as entry or exit points, right? And these prices are either going to back away from support or resistance or break those levels and then continue that trend further. So if we're going up, for example, we might run into some resistance along the way up. And if we happen to be breaking through that resistance level, then it's expected that that trend up might continue. On the flip side, if something is selling off, you know, maybe buyers are waiting for a price level to that's attractive for them. They may be waiting for these price levels to be reached. As buyers start coming into the market, they'll start the sell-off will start finding a little bit of support, and then once that supply, I guess you could say, is being bought up, maybe things start moving a little bit higher, right? So if not, though, they could fall and they could continue breaking downward as well. So it really just depends on, it's like a battle between buyers and sellers if you think about it in a different way. And they can often appear around major numbered price levels. So for example, 10, 50, 100 moving day averages. So we can go and show an example of that. So let's go ahead and go into the chart. So right now we're looking at the ES. And it's been an interesting year, right? Because so far, if you're just looking at from the beginning of the year, you can see that this area, this symbol, right, or pretty much any symbol for this year has been somewhat trending downward, right? But you can see some areas of support and resistance might be able to be identified just by looking at where things turn. So for example, if we use our drawing tool here and we put a horizontal line, And you can pick any area that stands out to you. I'm just looking at some simple areas that stand out to me. I'm going to go ahead and just use two different colors here. So let's just put red and green, right? So some simple examples here. So we could say that maybe this area, roughly, okay, this area right here might have been a resistance level, right? And maybe somewhere around this area might have been a support level, right? So we have a sell-off early in the year. Things kind of turned around here and started heading upwards. So from the last turnaround point where things started turning around at, we're looking at the low maybe of this candle to just get a reference point. Okay, so if we were in this point in time here, let's zoom in just on this section, right? If we're looking roughly at this spot, we've seen the sell-off happen. Things started to look like they were turning around at this point in time. So we may have looked down here and said, okay, you know what? Something about this price level down here at 4205.65 might have been a support level, right? Because things started to turn around. And as things started turning around, we can see we kind of ran into a little bit of a wall right here, all right? And this wall started to bring prices back down. As things started to come back up, it tested this level again, and then it started to come back down. And as we start moving forward in time, you can see that it hadn't quite touched this level again. So we could say that perhaps this area, based on the way price was not able to break through it, may have been a resistance level. Okay, so this is just a simple way to identify support and resistance. Now, again, you can see that we did break through a little bit of this support level later on in the future, but nothing seemed to really held, right? For example, we broke through it intraday and closed back above it. We started heading back higher. Here we broke below, right? And the next day we gapped down. So it gave us this feeling that maybe we might be breaking lower. But intraday, as you can see, this wick also was kind of whipping in and out over this area. So there's something about this area, right? Where maybe buyers are starting to pick up shares and trying to drive the prices higher, and sellers are trying to drive it lower. And there's just kind of been this battle going on in this section, right? And so it could be that this was a major support level, because then afterward, the prices went driving up again. All right. And then again, at this green line, you can see we hadn't really cleared away from this green line. You can see that a lot of the intraday price action kept kind of whipping over this green line multiple times, right? Throughout this part of the week here. And then as you can see, as time moves forward, this area again, once again, prevented the prices really from taking off higher, right? So we've been kind of stuck so far between, I would say from the beginning of the year, it looks like roughly around till May, we kind of stayed in this range of trading. Now it's been a really rough range because you can see these wicks are quite volatile and are all over the place. But if we were to back out and take a look at the bigger picture here, this is just one small area of support and resistance in this range until this last breakout here. Now, another theory with support and resistance, which let's see if we get into with the slides, going back over to the slides, is oftentimes previous levels of support may act as resistance in the future, and vice versa. Previous levels of resistance may act as future support. So let's see what we get in when we look at that. So once the support is broken, that same support level can become resistance. So this is exactly what I'm talking about. And resistance becomes support. The first time support or resistance is tested, there's often a pullback and a retest of that same level, which we just saw when we looked at the chart. But now once we break out, you'll see that that story starts to flip. So we go back over to the chart here. Okay, so here was the retest, right? So we tested this. One could argue that this was tested 3 times. Okay, 1, 2, and 3. Okay, and down here, tested multiple times, right? Especially when we were whipsawing around this area. But let's just group these 2 chunks and treat these as 2 different testing periods. Okay, I'm going to also treat this as a single testing period. You can see that once we broke out from this supposed support level, right? Once support failed, it kind of became, sorry, I accidentally moved my line here. Let me lock this so I don't move it. I'm going to right click on a line. By the way, you can do this with your horizontal lines. You can just right click on them and click on lock so that they don't move. I see we have a question here from James. Support and resistance is really important for entry and exits. Does TS have any indicators that automatically show the support and resistance levels? I've seen some pretty cool support resistance indicators on TradingView. Not that I know of, James. I haven't seen any that automatically plot them, at least not by default, because I was looking at the studies earlier to see if I could find any support and resistance built in. The only ones that I've seen that are kind of close to that, but I don't really use them much, are these trend lines automatic, and they put way too many lines in there. So I didn't want to use that for this presentation. So I'm going to go ahead and just answer no. I don't think there's really anything solid that puts in nice, clean horizontal lines on areas that identify support and resistance for you. Again, it's also a very subjective thing too, depending on what time frame you're looking at. You might have different support and resistance levels. That's another thing I wanted to point out. They can be drawn on multiple time frames. I'm using daily right now. You'll see real quickly as we move into smaller time frames how the story looks a little different. But I'm using daily only because it's somewhere in the middle, right? We're not going all the way out to weekly and monthly, but we're also not going into like hourly and 15-minute charts and things like that. So I find daily is a nice happy medium, right? To kind of use the support and resistance lines, which are really just horizontal lines. Okay. So, but what I wanted to get at here was, now that we have broken through this support level, if I go ahead and put in another line here, so now I'm going to make this one our new support level. Let me go ahead and bring this down. Oh, did that lock also? It locked. Let me move this down here. So let me just go ahead and bring it more or less around here, okay? Because this is the next run up that we had. So as we broke down, we can start seeing maybe the run up was here. You might be thinking, okay, maybe we have a support level right here. Again, this is a very dynamic process because you are basically setting them in as price is happening, right? It's not like hindsight where you get to look back and clearly draw levels of support and resistance. You're kind of going off of when price seems to be turning around. So perhaps at this point in time, you see, okay, we had a really nice low wick here. Price started moving up and up. So naturally, you might be thinking, okay, maybe this area might be acting as a support level. You follow it, you can see we whip under it. Again, we start heading higher. Okay, so clearly, based on just some of this interaction, we're closing above this level. We kind of touch it and we come back up. Maybe this area is acting as a support level. And as you're watching the candles form higher and higher and moving away from this level, you start to feel a little more comfortable, maybe assuming that this might be a support level. Now, once we get to the previous support level, you'll see that now this begins to act more like the resistance from the first set of lines that we drew, where this was the previous support level, and then we had a resistance level higher than that. Right. And as you can see, we started looking, okay, well, since this was the previous support area, are we going to break through this area or not? And as you can see that it didn't, right? As you can see, it kind of stops at almost like there's this invisible wall, like a ceiling. And that ceiling is what, we've been referring to as resistance, excuse me. So you can see as it starts falling down, we break through the support level. And again, we repeat the process, right? And so now we're looking for the bottom, the new bottom here, which is a little hard to draw right now based on the number of candles. But again, we would take our line, right? We'd start a new line and we would just start adjusting it, right? Just kind of looking at the lower wicks and saying, was this the wick, the lowest wick since we've broken out, right? And as we start forming new lows, we wait for finding those candles to start really pulling back up and moving away from the recent low. And that's how we kind of figure out how we can find out our support and resistance levels. Then this previous support we'll turn it to another color so that we know that now this is what we're looking at to see if we break through this resistance level. And these just, they become old at this point. So no need to keep old stuff around unless you want to, right? You can also keep these as different levels to for future trades. So for example, you can leave this a different color. If you don't want it to be the most recent, you can just make them, a different color. Same thing with this one here. We have another one from the first level. We can just kind of keep this as a different color, just letting us know that these were previous areas of interest, that these are the current ones you're looking at, but there are these other levels that were kind of key levels in the past. And as you start building your chart out, you're going to end up getting, let me zoom out here. You're going to end up getting all sorts of lines here. So it might be a good idea for you to develop your own unique system for identifying support and resistance, so that you can see which ones are current. Like for me, I like using red for the resistance support and green for the resistance. And now I'm just using yellow to mark previous levels that are not of immediate concern, but as things start turning around, maybe these levels might be important again, because there could be some unfilled orders here that are waiting to be filled. And that's like a very big thing too, right? So support and resistance and unfilled orders kind of tend to work together there. Let's go ahead and continue with the presentation a little bit. Check for questions. No questions so far, so that's good. And let's see what we got. All right, so support and resistance can be drawn on any time frame. So back to what I was saying, how I'm using daily time frame right now, and you can determine the interval of your charts to match your trading frequency. So for example, maybe if you're doing day trading, you might be looking at really small time frames. You might be looking at as large as 60 minutes or as low as 5 minutes, right? But you need to load enough historical data to identify those past swing highs and lows and connect as many as possible, right? A price level that is touched multiple times is often an indication of strength. So let's take a look at that. We already kind of saw that here. And this is actually a really good example, because even in saying that a price level is touched multiple times is often, but not always, keyword is often, an indication of strength, is because if we look at what happened this year, right, you can see that this price level was touched multiple times, 1, 2, 3 times, right? But we never broke through it, right? So even though it's touched multiple times, even though it's often considered a sign of strength, because if you're looking at this rally here, I mean, this does look like a pretty strong run. It wasn't strong enough to break through this level, right? Wasn't strong enough. And the same thing here. You can see we touched this one multiple times and it did break through. In this case, the strength of this downward trend really did shine through as we broke through, and we had some of the, especially here too. I mean, we had some really strong gap down days that ended up driving way below this the previous support level that was here. Okay, so and you can see we only touched it maybe 2 times prior to this gap, and we gapped through it practically. We gapped down and just broke through it on this last one. All right. So let's go back over to the PowerPoint. All right, and you want to draw horizontal lines connecting at least 2 of the most obvious tops and bottoms. If it's hard to see, it's probably not there. So it's a good point too. Sometimes we want to be able to connect these dots, and if they're not there, my approach sometimes when it's hard to see is I'll take the average, between points. So for example, let's say I could look at this point down here, but I'm also considering these points here. Again, this is easy to do when you're looking at things in the past, but when you're in the present, it's very, very hard to identify these levels. A lot of times what I look for is the low wicks. I'll look at the lowest wick and I'll drop my line right at the end of that lowest wick. And I'll look to see if we test that level again. If we bounce off that level, that might be a support level. If we break through it, I'll just move the line down to the next level down. There's also another really easy way to do that using line at price, which I'll get to in just a minute. Let's talk about different time frames, right? So now if we go to a 60-minute time frame, a lot of these lines might appear, but you might also find other areas of interest. For example, right here, we can see if I draw a horizontal line right here, I'm going to use a different color. Okay, I know this is going to be very colorful by the end of this presentation, but I'm just going to use white for my 60-minute levels here. You can see right here, there was a mini support level, right? Now from the daily, if we go back to our daily and we take a look at where this level is, you can really see that it's only applying to this section right here, the smaller picture right here. Okay. And maybe perhaps you can say that some of these levels here may be included in that. So there might be a small support level right in here that lasted for maybe 2 months. Okay. But if you're looking at a bigger picture, it really seems to start here and end here. Okay. So depending on your time frame and how you want to look at this picture, it really depends on how close you get. So as you can see from a 60-minute time frame, this area is very obvious and very clear. Look how many times we've touched off this. Now, the nice thing about this is that it's using the daily support level that we previously drew up here as resistance. So this support level that now became resistance, you can see we have a smaller time frame that we're using as support, but we're keeping the larger time frame as resistance. I think a general rule of thumb is that the larger you go in the time frame, the more significant the levels become. And so it's very important to kind of think about that when you're looking things at such a small time frame. Let's say we're looking at a 5-minute time frame. And we start zooming out, we might be able to see, okay, we got some levels maybe right here, really hard to identify them. Maybe we go to a 15-minute, we might be able to see some, right? And like I said, it's a very subjective thing. So we can see some bouncing here, but we don't see any clear areas, in this chart. Another way to draw support and resistance level with something as sloping is to use trend lines. So I'm going to give you an example of that as well. So rather than using horizontal lines are nice, and I do really like horizontal lines to connect the lowest points from each other, but sometimes things are a little more dynamic than just a straight line, right? And so you can also have what I think is, I kind of call them more like a moving or an angled support and resistance line. So I'll give you an example of what I mean by that. So I'm gonna go ahead and clear these out. I'm just clicking on my lines and hitting delete. Okay. And so you can also look at trends. If you tilt your head, you can also see those same points being moved around. And this is really the idea of trend lines. So with trend lines, we're basically creating a line for the best line of fit, I would say. And you want to find an area maybe that seems to get the attention most. Now we're missing some of this stuff here in the middle, but remember that you can use this in combination with your horizontal lines. Or if you really want to capture it as best as you can kind of come up like this and do the same thing right up here. And again, everybody has a different way of doing this. So you really have to think outside the box a little bit and be kind of creative when you're doing your analysis. And you can look at it kind of like this. So for example, now that I have my two, I can show you what I mean. So I have my red, I have my green, okay? And you could look at something like this as well. Now, this is not exactly the same thing as support and resistance. These are more of a trend line, but the idea stems from support and resistance, but you're just applying it with the slope of the instrument that you're studying. So in this way, you can use a trend line as a support and resistance because you can kind of get an idea for, you're factoring in the value that the step downs that this is taking in its downtrend. And so you're saying, okay, more or less, there's a slope here. And if we're below the slope, there is a good chance maybe, right, that things may retrace and move up to the upper slope. And it's not until things really break out from this level, that's where you can set in a horizontal line, for example, like this. So here's the intersection between the two. And then you can see if this becomes an area that bounces above it. So you're using a different way to view support and resistance with the assistance of some trend lines, right? So there's a lot of different ways that you can work in support and resistance. This is just another method that you can use as well. So this is more of a dynamic support and resistance where you're factoring in the lower lows and the lower highs, and you're using your trend lines as support and resistance levels. Okay, but traditionally support and resistance levels are done the first way, where you are connecting these points using horizontal lines, again, connecting these points using horizontal lines and so forth. Once they break through the horizontal line, for example, like how we had earlier, then that support level, then becomes a resistance level and so forth that you want to see if we test, and if it holds and then it goes continuing down, then you know, okay, for sure that just became the new resistance level and so forth. Let's go ahead and go back into the presentation. So you draw a horizontal line connecting at least two of the most obvious tops and bottoms. If it's hard to see, it's probably not there. So that is, again, the traditional way of how to draw support and resistance levels. All right, and that pretty much concludes the support and resistance presentation. But I wanted to throw in that trend line analysis in there only because I think that when we have something trending downward, it's always good to also consider that slope when you're identifying support and resistance. And you use both methods, right? You use the traditional method connecting the lows and the highs, but also have your trend lines in there as well. So you get an idea of what the ebbs and flows are while factoring in those lower lows and lower highs. Or in the case that something is rising, for example, we are consistently raising interest rates right now, right? So I've been looking at a symbol that is moving upward with that. And you can see here, we're looking at TBT. This just happens to be an ETF. It's actually an inverse leveraged ETF. It's a 2x leverage ETF, which is not suitable for all traders. It gets rebalanced daily. It's not really a recommended security as what it says in its prospectus because of the daily rebalancing. But if just for an example of looking at its movement, you can see clearly that things are moving higher, right? Because as interest rates rise, this is telling us that the bond values are dropping, right? So as the bond values drop, this starts to move up, right? Because this is shorting the 20-year treasury. So as interest rates on those bonds rise, so will this product. And you can kind of see that where we can identify lots of areas of support and resistance here. So for example, we can put in some horizontal lines, right? So let's start with the bottom here. And then right here, we have another top, right? Now I'm very zoomed out. So I'm gonna go ahead and mark some of the areas that I consider more or less the top. We started kind of falling back down again, right? And then we started finding a new level of support here. So I'll just go ahead and pull this one up here. All right, so let's just draw only the support levels. So I'm going to use the line of best fit. So everything that kind of touches this line, even if the body of the candle kind of comes in, right? Then we have another one. Another obvious one is right around here, right? Then you have a little one here. And you can see it's just kind of staircasing its way up, right? And then as things are rising, you can see, for example, actually, let me make these red. I'm going to make the support levels, I'm going to make them red. So let me just, I'll just right click on them. Red. Do the same thing here. I could set these as defaults also. As you can see, I have them defaulted to green. You can default your colors, but since I'm using two colors, I'm still going to have to go and change at least one set. So, all right. So now I'm going to go and set my support levels. So resistance, let's see. So I think some resistance might have been right around here, right? Right around here, more or less, we had some resistance. Same thing up here. Had a little bit of resistance, I would say, somewhat around here. Looks like it was kind of bouncing in this line and then it broke through. And you can see that this is not a very clear area once it came through here in the future, right? You might even argue that this area might have been right around here. I would say would have been a probably better ceiling because things really started moving down from here. But this area didn't really hold too well. This is a very tricky area to read. We gapped up over it, and like I said, it's not a perfect science, right? You can see this area came very close to touching this level and started moving higher, which is why when you're looking at things in the past, it's very easy to then just make those adjustments. Again, we have another one right here. Right, so we started moving up higher. Here was the high. We started coming back low. We tested, came back, broke through, right? Broke through, and we didn't even come back anywhere near this level anymore. It just kept on going until about here. So the next resistance level, I would say, would be about right here, right? And this is very easy to do historically because, again, it's very easy to look back and say, oh, right here is the second level, and kind of touched this point, came back down, right? And you would be changing all these colors as you'd go. All these pretty much are now old news and so forth. So, but you can see the multiple levels that end up being formed. And then once these things break through, you kind of follow that trend up, hits a ceiling, things start turning around. And when things turn around again, that's where you then would put your support and resistance line. So this is just how I've learned to do it. And then factoring in the trend, right? So we can use our trend line. And let's see if we can't. This is actually starting the curve. So this is going to be a very hard one to really identify because as we ramp up as the interest rate environment starts getting higher, these become harder to draw as straight lines, right? Because I would probably narrow these down. Again, best fit is a very subjective thing. You can see it's very hard to get clean lines here with this. Even if we factor in the most recent time and you want to really narrow this down, very hard to do that. You got to get the line of best fit. I would say the lines of best fit probably would narrow this down somewhere between these 2 points, right? And as you can see, it's not very clean. Really moves around a lot. But if you're following just these areas of interest and we go outside of these lines, keep in mind where your support and resistance levels are and use them in conjunction with your trend lines. And again, I use the rule of best fit only because nothing's perfect, right? I can kind of move these around to try and get a range, but the idea is to try and find that range where the price is living between most of the time. And anytime it falls outside of that, make note of it. Maybe there's something going on. Maybe it could be an overreaction in the market. It could be, keep in this particular case, because this is directly related to interest rates, maybe you might want to follow something that might have an effect on that, like the 2 p.m. Fed releases every month or so, whenever the chairman of the Fed is speaking for this particular instrument, maybe take a look at the behavior of how this thing is moving on that particular day and see what happens, as these trends are either broken, right? You break outside the trend line or they come back in. But the idea is to try and set yourself up with some analysis that gives you an idea of where that behavior is normally as it's ebbing and flowing, along with your support and resistance lines, and see if you have something that tells you something's a little off, right? So these are just some ideas. I'm going to open up the floor for some questions since we have how much time do we have left? This is scheduled till 1:30, so we got quite a bit of time left. So let's go ahead and open the floor for some questions. So James, Matt, Peter, and Rich, you guys have anything? Let me go ahead and open up your microphones. You guys can now unmute and ask questions. Hopefully you all are doing well. We're gonna have a staring contest.
Well, I'm kind of interested in them automated tools, because placing trades, essentially, you got to look through a lot of trades and you got to look at that support and resistance.
Hmm.
And it's good to have automated tools to draw it, it saves a lot of time. But yeah, I know there's nothing pre-packaged with TradeStation, but I think there is tools made by others that show it. And I think, the trading app store had some. So,
Hmm.
Mike, what's happening to everything in the trading app store with regards to us?
I don't know if we've really made an official announcement with the trading app store, so I don't know if I can speak on it. But I know that TradeStation has made the decision to phase out the trading app store and move away from that part of the business, it seems. I don't know if it's being completely removed, but I do know that they plan on moving away from it right now, at least. I don't know if it's going to come back in some other version or not. So it's just not something that's been discussed with me directly. I just know that they're planning on moving away from it. So as to the reasons as to why, I'm not 100% sure. But I can show you one trick if you're interested on having lines automatically drawn for you that do horizontal lines. So I'm going to show you right now with an example using a study called line at price. And I changed the formula with line at price. So I'm going to prompt this for editing and hit OK. And you see this where it says line value close. Well, what I like to do is I put in a very simple formula. It's called
I
low.
think we're looking at the wrong screen, Mike, because
Are
we're
we?
looking at you.
Ah, you're looking at me. Okay. All right. Let me change that for you. Give me 1 second. Now it's not gonna keep the lines there for you forever. Okay. But let me show you. So can you see my screen now?
Yep, can see it.
Okay, so I'm gonna go to studies, add study. I'm gonna click on line at price. Now I'm gonna click on this prompt for editing box, and it's gonna open up my input dialog window. Okay, if it doesn't open up to the inputs, let's say you're in a different tab, just click on inputs. And under line value, what you can do is you can type in the word lowest. And then you're gonna open up a bracket. And you're gonna put in an L for low and a comma. And this is you're gonna set a numerical value of how many bars back you wanna go. So let's say you wanna just base, it won't, like I said, it won't save it, but it's a good starting point for you to help draw your lines. So let's say you want to look at the lowest low, which is that L there of the last 45 days, right? Not including today. So not including today means you're going to open up a bracket and put in a little 1 after. Sorry, I forgot to use I believe this is how you do it. Let me see if this works. Okay, and you see it puts in a line here. So it's finding the lowest low of the last 45 days, not including today's candle, because you want to see if price dips below it or it goes above it. Because if you don't put that little bracket, then what's going to happen is as the day moves lower today, it's going to start moving that line down, which might be what you want. But if that's not what you want, then you can use that bracket one. So I'm going to go ahead and open up that formula one more time. I'm going to add study. I'm going to do line at price, prompt for editing, hit OK. All right. And this time, I'm also going to do the highest high, which I'm going to do with a bracket H, or parentheses, I should say, comma, 45. Close that. So this is going to look for the last 45 bars, and it's going to put it's going to mark the highest high with a horizontal line. But if we are breaking that highest high today, I don't want that line to move, right? So I'm going to put in a bracket, 1, another bracket. This is offsetting, right, from today's candle by 1 candle, by 1 bar. That's what this means. So then I'm going to hit OK. And you can see that this candle here is the one that it's 45 days ago. Looks like the highest high of the last 45 days. Tomorrow, what's going to happen is this will then be down here. And this one will probably be here unless we break that low later today, right? And so what this does is kind of gives you an idea of, it's kind of a more recent automatic way to draw these lines. And then what you can do is if you feel like there's a support line that should be drawn in case you don't want it to change, then at that point you can just draw your own horizontal line over it. But this is a nice way for you to see just the recent high and lows based on some time bars back from the current day. So it's not a true support and resistance level identifier. This is just kind of giving you a range based on a time period that you designate, and you just want a horizontal line drawn that's identifying the highest high and the lowest low over some time, right? If I change this formula, let's say to something smaller, like let's say I want to change it to 10, then I could do this. I can put a 10 here, hit OK, and you'll see that it'll then pull up the highest high of the last 10 days. And again, if I do the same here, it probably won't change since this is the lowest low of the last 45 days. But nonetheless, you'll see it doesn't change. And you can also get creative with it. You know, when you edit this, you can set in a weight, you can give it a color. For right now, it's using teal. You can type in, for example, green, right here. Or you can just erase this whole thing and just type in the letter, the green here, and it'll be green. The weight, you can give it a higher weight, like a 2, right? Hit OK. And you can see that it makes it a little bit more bold. Here, you can do the same thing. You can edit it, right? We can do red, right? We can also give this a 2. Hit OK. And so now, whenever I change my chart, this is the cool thing about this, is that this is something that's applied as a study to your chart. So these do not stay on your chart. This is an actual indicator that you've added to a chart. So let's say I look at Apple, you know, it's going to give me the same thing going on with Apple, right? So this is the last 10-day high. This is the last 10-day low, basically the highest high and the lowest low of the last 10 days. If I look at TBT again, that we draw these horizontal lines with, well, it ends up blending in with my other ones here. So maybe not TBT because I use the exact same colors and weight. We can look at, let's say QQQ, right? So this is the last 10-day high, the last 10-day low. And you can kind of see, all right, this kind of identified maybe a potential little mini support level, right? So like this on a 60-minute time frame, if I were to mark this this level at 312.35, let's say I actually put a horizontal line to mark this area of interest, I'm going to set it right on top, right? And then I change time frames. You know, now I can see this this level here, and then this is the one that these levels are the ones that the indicator are drawing on, right? These are the ones that are by the study. This one I can move around, but this is done by the study. So, and you can kind of see, okay, hey, you know, on the daily time frame, you know, this quick horizontal line at price indicator kind of identified something for me that I might want to mark, you know, so you can use it in that way. So rather than having to guess what's the lowest low and what's the highest high of some period ago, maybe you can use line at price to help guide you set those lines. So other than that,
yeah, that's a good idea. Thanks, Mike.
Yeah. Other than that, there really isn't an automatic way to draw horizontal lines unless you program them into easy language. And that can be a little complicated because it also requires that you not only know what criteria you want to draw those lines, but you have to know how to use drawing objects. So you have to be able to write in a little bit of, they usually use methods. So you have to know the basics of writing method code and object-oriented, easy language, and drawing, how to do drawings in easy language. And it will apply those for you. So if you like this idea, maybe you can, we can put in a request to figure out how to automatically draw support and resistance lines based on, certain criteria. But other than that, not really sure how you would do it. This is kind of like a quick fix way that I do it, just to kind of find the recent highs and lows, and I'll just look at the chart and see if I see anything, that stands out, like how this one kind of stood out to me here. Okay, this area might be of something, some importance, and I might want to mark this line, which I did. So now if I take this study out, I'm gonna go ahead and edit the study and just turn it off. Turn these off. Just hit status to turn them off. Now at least I have my horizontal line there. So now I have it marked, and I can lock that in. And now I have that there for the future.
Nice.
Yep. All right. Any other questions? My battery is running low. Does somebody want to mail me my charger? I left it at the house, so I have a habit of doing that these days. I gotta bring it with me. So, and you can also see here, so this may have been also an old level, maybe that we were looking at, because you could see the low here went up. There might have been a line that we drew up here, right? Let me put in a new parallel. Let's say this, I'm looking specifically at this area here now, right? So let's say this was an area, right? This low point. Say I was following the lows and then it really took off here. Here was the high. Let me move this one up. I think I have this locked. All right. So I'm studying the past here. So it kind of came up, came down, came back up, came down, it broke through it, right? It broke through it, but then we kind of had this whipsaw kind of thing going on here. So, and then it just kind of took off after that, after it kind of was in this rough area. But then we kind of came back to it way later. Right here, we broke through that. And now we're kind of finding, again, some resistance in this area. And again, there was a really big dip down. So you may not even consider this a support level, right? At that time, right? Let me unlock this, because you might have drawn your support level down here instead, right? You might have drawn it here. But then you can see that there was some stoppage going on. There was something up here that was preventing this from going up. So if you drew another line here and it ended up being maybe somewhere in this area, now you look at the current date and you're saying, oh, maybe orders came back, to this area again. Maybe, because it kind of took off from here in the past, maybe it'll do it again, right? And so maybe there was the idea that maybe there might be a breakout here. So that's kind of what I'm talking about, where, previous support levels sometimes may act as resistance. And so it could be that this was something there, people are looking at this way back in time and they're seeing this happening. And so they're kind of maybe setting an expectation for this level to be maybe like a key level.
I can guarantee you traders are doing that. So what you're saying is 100% true, because that's what traders do. So yeah, so it's definitely spot on. Uh-oh, Mike, did your computer shut down? I think Mike's computer shut down. So have everybody have a great week or great week. Bye bye.
Hey, James, are you still there?
Hey, you're back.
Yeah.
Your computer figured it shut down.
Yeah, no, it did shut down for a moment, and I was able to get plugged back in. So, but I did lose guys. Looks like.
Yeah, I think everybody signed off because
Yeah. I
looked
mean, we
like
were
you're.
done. Yeah, we were done with the presentation though.
Yeah.
So, but yeah, you were saying that people definitely do
Oh,
do
for
that.
sure. No, I talk. You know, I'm kind of on these little clubs that these are big time traders, and believe me, they have a strategy, but one part of their strategy is the support and resistance because
Mhm.
that's where price is. In other words, that's where they'll target their entries and exits. So their strategy will say enter, but they won't enter right there. They'll look at the support and resistance to get better entries and better exits. So they kind of fine tune it a little with the support and resistance.
Yeah. And like I said earlier, the school of thought tends to be, but doesn't necessarily mean or guarantee that trends set in or support and resistance levels that are identified in the larger time frames, they tend to hold a little more importance than those that are held in the smaller time frames. Again,
For sure.
we don't
And in
guarantee that.
fact, they love it when they're lining up. So basically they're looking at monthly, even monthly support and resistance. Depends on, what investment time frame they have, but generally monthly, weekly, daily, and then, if they're day trading, they're intraday too, looking at support and resistance. But even the day traders have a weekly chart and a monthly chart up, just to know where them support and resistance, because when they all start colliding, that's a real strong support and resistance.
Yeah. So perhaps here I would say, we kind of flatline around this area before moving for a few months, right? You can see the touches around here with these 4 candles. So maybe this would have been one area, right? You can also kind of see we tap, maybe in these months too, we come back to this level. So I would say that this might be, let me delete this one so you can see which one I'm talking about. This one here. I'll make the weight a little less. We'll go to a 1. So you can kind of see what I mean here, right? So we kind of touched this area a bunch of times from August of 21 through March of, August of 20 through March of 21. We kind of have activity near this level. Doesn't seem to matter how far we got away from it. It kind of came back and then it took off, right? So now that we're back in this area again, maybe this area, might act, as like one of these levels. If we look onto a weekly, then we can see if this translates onto the weekly. And so you can kind of see what this looks like in the weekly sections here. So this is that same 4 months time span, August through March. You can kind of see that it's touched this level multiple times, came back to it, and it's taken off. Now we're breaking below that level. So, and if we go to a daily, you can kind of see that same thing right here, right? Touch, 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 break, almost a touch there, touch here, and then it moved on. So here we've just kind of been muddying through it. It's kind of been whipsawing through it. So it doesn't look like this level, at least recently, has captured the attention of anyone. It's just kind of whipped through right through it each time, right? So, but we would definitely keep an eye on it, because if markets start moving higher, we want to see if this level still has any importance. So far, it hasn't shown any importance, and so
Yeah. So one of the things that traders do is, well, first they want to decide if they're if they think the trend is downtrend or uptrend, obviously, or consolidation. You know, they're just
Right.
trying to figure out them three. So once they have that premise, let's say that, there's also a graph. There's a beautiful graph on somebody's website that shows the four phases of the market. Essentially your uptrend, you're consolidating, your downtrend. Well, they break it up into four. So if you think you're in phase four, downtrending, then what they're doing is they're looking for these supports to be taken out, right? But
Mhm.
then they want to pull because they don't like buying on the lows. Then they want a little bit of pop up, but they plan on shorting it as soon as it pops up. So
Mhm.
so there's a lot of people playing that where they're only playing shorts right now. So they're watching supports getting taken out, and then they're waiting for another kind of bear market rally, and then they short into that. And
Right.
so we'll see. So we might be still going down. There's some people that are trading like that, expecting much more of a bear. And because if we're in the bear phase four, that don't end in a few months. That takes a year or so to roll out. And then so they're kind of playing the short side. That's the big money seems to be playing the short side, but we'll see.
Right. Right. So, for example, here, uh, using some trend lines, you can get an idea also of the ebbs and flows. And so, for example, this is kind of something that stands out, from this trend line. But if things are kind of living within this area, and again, these are just arbitrary points drawn, um, just to try and capture this area of best fit, you know, um, there's really no science behind this. This is very subjective. Everybody can have a different take on this. And the idea is to see how this market behavior behaves when it comes across one of these key levels that you're identifying as either support or
Yeah. You,
resistance.
you see that big pop up that goes right through your line?
Right
You
here.
got market right above it, that one right there. So let me tell you that likely what happened there. The people shorting, they have pretty tight stops because, hey, they know that essentially if they're really good, they're getting like 75% accuracy, 80, possibly 80, but 70s to 80s. They know that 20% of their trades are going to be bad. So what happened right there at the pop up, you're catching them, you're catching them close their stops. You're hitting all their stops.
Mm.
So that's why it pops way up because you're getting all these stops. They're stopping out. But guess what? Once it gets to the top, it starts rolling. They short again, and they're making back their money. So they do get out, and then they reshort. So that could have been that little run up right there. You're basically stopping out all these at different stop levels, different traders, and
Hmm.
it runs right up because you're basically stopping them out. So they have to buy. So that's what causes the influx of buying. All the shorts have to close by buying.
Hmm. Right.
but they,
And
but
the if I just draw this here, that's good enough there. So you can also see what I'm talking about with these lines, right? So you're looking at a behavior, you're kind of starting to see that trend, you're drawing your lines. This area that popped out of this trend line also coincides with maybe a previous support level right here. So we did a breakout here, right? Actually, it's not really a true breakout. I'd say the breakout occurred, I would say somewhere around here, but it kind of dipped down, touched here, touched again, and ran up. So this became perhaps somewhat of a short-term support level, but nonetheless a level that was respected, and then it came back up. Then up here, as we started moving back down, we touched here a few times, touched again, and then finally broke through it. Found this area, kind of bounced and came back up again, right? There's a little bit of indecision right here. Let me move this in here. So right in here, you can see there's a little bit of a indecision going on, right? We
yeah,
kind
and I'll tell you right now because I heard a big trader talking about this. When it was happening, a few months. Well, when was that? That was a few months back or a month or so ago back. Um, um, when the market's transitioning, you don't know it's in transition mode. You really don't know. Are we going to keep going uptrend, or are we going to really roll into a downtrend? It's the transitioning phase. So guess what happens in the transitioning phase? They're very cautious. Sometimes the trading becomes very light because they don't, they're not ready to do a short yet. They want to see how this rolls out further. So then transitioning phases, they're dicey. So there's going to be less money flowing to them because they're more dicey.
Right. So this area right here also might be of interest if we're zooming way out here. A little bit of a peek through here, but we kind of came back above it and started this run up here from here to here. So, which is very close to where price levels are now. It just seems that, when you draw trend lines too, they extend to infinity, but this doesn't necessarily mean that this is the path, right? Because it could always change. It's just to really help us with, in fact, we can turn that off. This extend right. Really, the way I would treat it is more like this, where you're just kind of setting an idea of where things are now, just like this.
Something, and that's exactly, yeah. I don't think any of the big time traders, they use them trend lines extending, because that's not the purpose of them.
Yeah, it's not
their only purpose is to see where past support was, because now, or past resistance, because then it'll be support. Essentially previous supports become previous resistance. Previous resistance becomes previous supports. I mean, current, past things, they flip. So all they're looking at is what's going on, where's their last support and resistance, and then what's the price doing with regards to that. And once it penetrates it, now they're just looking for a little rally back, so that because they're going to short it. In other words, they already got their setup. So, it's kind of like a setup and trigger. They're looking for a setup, and once they get their setup, now they want their trigger entry. And so essentially they kind of always want a better price for an entry. So they have their trigger. Sometimes they get them. Well, majority of times they do get them, but they're not worried about the ones they don't get. They get enough trades. So, yeah, that's that. They don't extend them trend lines because trend lines don't really forecast the future. You don't know where price is going.
Exactly. The trend line is just to kind of mark, I think, the ebbs and flows of this, like if it's slope. So you're just trying to find more or less the slope of the trend. So you're just trying to find that slope using the line. And because you can set them on the lower end and the higher end of this ebbs and flow channel, you end up getting two trend lines that kind of create a more or less a price channel. And that channel, at that point can serve as, potential entry and exit points. But you can also use that in, with your support and resistance lines, which are the horizontal lines that you draw on the chart. And you can see if any of those areas tend to intersect, or, you can use them also to get an idea for, just key areas to look out for when deciding to make a trade. So it's just different examples of how you can use some of the drawing tools in conjunction with support and resistance.
You're kind of hitting the core of the algorithms. They're essentially trading channels, and the channel could be uptrend, downtrend, or consolidation. And all they're doing is trading the channel and then customizing the entries and exits a little bit better to the previous support and resistances. Because they're expecting to get close to them areas.
That's right. All right, my friend, let's go ahead and close out the class. So I'm going to go ahead and put back our disclosure here, and we'll just leave this up for just a few moments. Again, this content is for educational and informational purposes only. Any symbols, financial instruments, or trading strategies that were discussed in this class were for demonstrational purposes only and are not a research or recommendations. All right, everybody. Thank you so much for attending the class. I'm sorry for the brief period that we went offline, but we are back to finish the class. Thank you so much, James, for all of your questions and your comments. A very active class member today. And I just want to say again, once again, my name is Michael Tibbetts. I'm a content specialist here at TradeStation Securities, doing the masterclass session today, filling in for Jesus. So hopefully you all have a wonderful day. And if you are around tomorrow, I'll be doing my getting started classes as well. So join me in the getting started if you have any questions with getting started with the TradeStation Client Center. We're going to be going over the Client Center tomorrow. So join me tomorrow at 10:30 a.m. Eastern, followed by Q&A at 11:30 a.m. Eastern on the Getting Started channel at youcantrade.com. All right, everyone, take care, and we will see you tomorrow. Bye-bye now.